Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guide Podcast. I know it's been a hot second. Schedule's been a little bit rough, but we're going to talk about the Fed rate cut, refinancing, and some of the things that are going out there with some of this advertising that we see with some competitors. It's a little concerning. But nonetheless, let's hop into the Fed rate cut. So Fed did cut rates, quarter of a point. And like we've always talked about, the Fed rate cut's not directly correlated with mortgage rates. Mortgage rates are more connected to the bond market, but it's a leading indicator of where things should go. And I've always talked about how we're very speculative, right? Mortgage industry and the mortgage-backed securities, very speculative on what's going on in the market. Any chatter, any talk, we adjust. So obviously, at the last couple of weeks, rates have slid down pretty good, right? Again, like I don't like to talk specific rates, but like upper fives, low sixes, stuff like that. It depends on your program, depends on your credit score. A lot of things factor into it. Well, right after the Fed rate cut happened, not an hour and a half maybe afterwards, we got alert to lock. So what does that mean? Alert to lock means the market's moving in a direction that we really don't want it to. Okay, so although Fed cut a quarter, we actually lost 30 basis points on mortgage-backed securities. Now, will it calm down a little bit? Sure it will. But I think another big reason why that happens is because Jerome Powell opened his big mouth that he doesn't think that they're going to have another rate cut by the end of the year, as was originally anticipated based off conversations and things in the media and economic indicators. So that might have been why. But again, they kind of pop back up a little bit, and then they'll slowly trickle back down. Still a great opportunity for some of you out there that are in the upper sixes and low mid sevens to look at a refinance, which leads me into be careful when you do it, okay? Be careful when you do it. I'm sitting here looking at a closing disclosure from a very, very, very large company, and I will not name who it is, but I'm sure some people can take some guesses. And the client was at 7 1/8. They've only saved him a half a point. So one of the things that if you're a homeowner out there right now, you are getting absolutely blasted by your loan servicer. All kinds of low rate offers. I mean, it's all over the map, right? Some of them are accurate, some of them are not accurate, some are teaser rates. Some of them have no idea what your credit score looks like or what have you, right? So it's not accurate. It's just a teaser to get you to call them. And a lot of these loan servicers will wait until the market just dips just enough. So a half a point drop, which is truly like the bare minimum that you have to have in order to pull off a refi, typically. Obviously, loan amount plays a role because it's usually like a $50 a month savings in your principal and interest just to make it make sense. And they're charging an arm and a leg to get this stuff done. So they saved this borrower about a half a point, charged him almost 2 points in discount points to do the refi, plus the regular processing and underwriting, plus of your title, all that fun stuff. If they had called us, the original lender, or maybe we should have been more proactive and beat them to it, we would have saved them about $3,000 in closing costs. It's a sad day. Plus, the thing is, guys, you got to pay attention to these numbers. I've been in talks with so many clients, and we run the scenarios, we run the rates, and be like, well, they always ask, hey, where do you think they're going to go? I don't have a crystal ball. I can give them my 2 cents. Obviously, that's not guaranteed to happen. And we come to a conclusion that, hey, you know what? I'm going to hold out just a little bit longer. Maybe it's not the right time to buy, or refinance. So don't fall victim to whatever you're getting in the mail all the time, whether it's through the loan servicer or just someone sending mailers. Call your original lender and your loan officer and have a conversation. Talk to them about the offers you're getting. See what's real, what's not real. Like if you call our office, I give you a no BS assessment. I don't care. If someone else beats my rate and beats my cost, it kind of is what it is. It's the nature of the beast, right? But don't get taken advantage of. All right? This poor individual got charged an arm and a leg to do this deal, and it saved him $50 a month, maybe 60 tops. And it's just simply not worth it because they also reset the term on the mortgage. So that's my little soapbox for the day. There's a lot more I could talk about on that, but I'll pass. What I mentioned earlier was a little bit of RESPA violation stuff. People talk about us all the time in RESPA violation. I do a customer appreciation event every year, but I invite every individual from those offices. Therefore, I am in compliance. But what I'm talking about is things like there's been a lot of talk again about Zillow and Zillow co-marketing, and is that compliant? Because So a little rundown and education on this front. When doing any kind of co-marketing or any contributions to marketing in general with a referral partner, it's not that it's not allowed, but you have to be able to document that the portion that you're paying for is proportionate to the amount of advertising you are receiving jointly, right? So like Zillow marketing and stuff like that, it's very, very difficult to be able to document. So like, I don't know, let's say someone's spending $1,000 a month. A realtor's spending $1,000 a month. They come up to you, they say, I want $500 a month, and we'll co-market. Well, you got to be able to document that you are popping up at least 50% of the time on that co-marketing because you're splitting it, right? Or however, whatever the proportions are. That was just an example. But that's one of the challenging things. And Zillow marketing is back in talks with possibly being RESPA violation. Not sure. It's very borderline, right? Because it's very challenging to be able to document the proportion of what you're showing up for that co-marketing piece. So it's just one of those things I see, and a lot of people are sharing a lot of that stuff, and it becomes challenging. You know, I'm just more of an old school guy when it comes to creating relationships and closing deals. I'm not out there all the time taking everybody to lunch and you know, schmoozing them and stuff like that. I'm more the guy of, you know, myself and my staff. We're here, we're always working, and we're getting deals closed. We try to give the best service humanly possible. And by doing such, we hope that client is so happy that they're going to hand you back referrals, right? They're going to send you your friends and family because you referred them over to us. We took good care of them. And I hope that's usually enough. Sometimes it's not, though, is it? Sometimes there's some people that are flavor of the month type people. And I'll give you an example. I had a realtor conversation, not in my general market, right? A little outside my market. And they've heard of me. I've heard of them. Had a conversation with them, wanted to meet up, wanted to try to develop some relationship. And this individual was very, very blunt with me and said, I will send you almost every single deal I get. And they're a pretty big producer. About probably, I think I looked at the numbers, between $9 and $10 million a year in volume. And as a real estate agent, that is great. That's fantastic. That individual said, hey, you know, you pay my BMW lease and I will get you all of my business, or the majority of it. I kind of giggled because I thought they were joking. They weren't joking. They weren't joking even a little bit. So I politely declined and said, I don't think I'm the LO for you, and then hung up the phone. That was it. So it's very interesting. And I'm not saying all agents are like that. Obviously, that's not the case. I have so many referral partners that they want absolutely nothing. They just want to know that when they send their clients over, they're going to be taken care of. And when we issue a pre-approval letter, they're going to go to closing. I mean, barring nothing major coming flying in. But that's who we are. And that's how I like to do business. Clean. We reciprocate as best we can. Very rarely do I have an opportunity to actually send a client to an agent, because the majority of the time they already got a realtor, right? I mean, if you talk to anybody, anybody you talk to, they probably know 4 realtors. So it's very challenging for us because we're not a nationwide company, right? We don't have this massive direct-to-consumer platform where we're just pulling leads all over the place and sending them out. We don't have that, unfortunately. We're very, very client-centric and referral partner-centric and relationship-centric. That's who we are as a lender. And I hope you guys can appreciate that if you're out there watching your client or your realtor. Again, another soapbox. So hopefully I didn't take up too much of your time. You didn't get bored with it. But that's all I got for you guys this week. So let's keep an eye on the market, guys. It is going to slowly continue to trickle down. We hope, we expect. Obviously, like I mentioned, no crystal ball. Can't guarantee it's going to continue to go down. So if you are in the market for a refinance, now is still a great time to take a look at it. And obviously, purchases is what we do. So remember to subscribe on YouTube. Check us out on Apple Podcasts and Spotify. We'll catch y'all next week.